Yeah, I try.
Oh, guys, so we are live, Mackenson Bonnet. We are on now, and you talking about you're shy. I don't believe that. Everybody, he's talking about how shy he is, but
Yeah, just a
I
little
told him he's
timid.
not too shy to make the money. But I always like to have pre talk with all my guests and everything. We get all the jitters out, but this is your girl, Qadriyyah Marie. I'm the host of On the Cue with Qadriyyah Marie. I am making my return. I took a month hiatus as far as recording the podcast. And again, I am back tonight with my dear friend, Mackenson Bonnet, Mr. Mac, as he likes to be called. And I'm just feeling very fortunate. It's Happy Wellness Wednesday. I feel like every day should be a wellness day, but especially today. So I wanted to bring him on tonight, just to talk all things real estate and investing. We also have a special surprise for those of you who are tuning in. Please make sure that you guys follow us, that you share this as well. This is going to be some pivotal information for anyone who just has a possibility or even thinking about purchasing a home. We're going to talk about all different things. This is all about Mac tonight. This is his world, something that he's delved really big into. He's been doing it for a while. So, Mac, would you like to just briefly introduce yourself to the On the Cue with Qadriyyah Marie viewers?
Yeah, absolutely. First and foremost, I want to just thank you for the opportunity. I think it is great to have this on. You know, uh, just on the Wednesday, because financial health is definitely something that's important. But for those that don't know, my name is Mackenson Bonnet. I'm a real estate agent. Also invest mainly in stocks, but have done some dealings in real estate as well. I've been a realtor for I'm on my fourth year now. And
Wow.
it's been wonderful. It's definitely been wonderful, especially this year. Like I've really seen just the business just really grow, and I'm grateful.
Yeah, your business has definitely been growing since I've been following you. I know you said you've been doing it for 4 years. It feels like you've been doing it for almost 10 years. Just because just from following the level of expertise that you're giving out, and you're always constantly posting, which I think is wonderful because it lets people know not only what it is that you're doing, but that you're actually out here trying to help people with your knowledge. Some people like to gain knowledge, but they don't want to share it with anyone. They feel like
Absolutely.
it's just a secret and it's just for them to hold on to, versus knowing the fact that just sharing it, even posting it on Facebook, for example, someone is going to read it. Someone's going to learn something from you. And of course, as far as business goes, you may have possible clients just from the
Absolutely.
fact that you're willing to share what it is that you've been learning.
Yeah, absolutely. Like as they say in the industry, you can't be a secret agent. You have to let everyone
Right.
know. You have to show that your expertise. You have to be willing to give value every day. So with the videos or with whatever I'm sending, I try to just share some wisdom, share some insight into
Right.
what it is, and also motivate. You never really know. Sometimes people may think the home buying process is more complex than it really is, and they think it's a long-term goal when they realistically might be in the position to buy then and there.
Right.
Yeah,
And that's pretty much that's where you guys come in, to let people know that it is possible to do. So we have
exactly.
we have some people coming on because the show is live again. So we have some viewers coming on, leaving comments for us. So it's my cousin. Hey Kai, it's always nice to have family come on and support. What's up? I hope you guys are gonna be taking notes as well, because it's a benefit for anyone who's watching tonight. Hey Wanda, hey, how are you? Happy Wednesday to everybody. Now my mom is on. This is Mama Brown. Hey, Ma.
Hey, Ma.
I appreciate you guys coming on, supporting us. My sister, my best friend, Latoya is on. She said, "Nice." We are definitely here, Toya, supporting. If you guys have, any comments that you would like to share, any insight based on the conversation that we're having tonight, any questions, this is what we're here for. Or should I say, Mac is here for, because I am a newbie myself, so I'm on here learning these tidbits for myself as well, because I'm a renter right now. I don't want to be a renter for much longer. I know it's in God's plan for me to own my own properties. I will say, with an S. I don't want to just own, one piece of home. I want to own multiple homes and properties and all that stuff. I don't know if I'm ready myself to go into the landlordship world, but I'm definitely interested in it, and I'm happy to have people like you in my life, Mac, who would be able to give me that guidance, because when you're a first time homeowner, you are pretty much clueless. No matter what you see on TV or what you may read, it's very important to have someone, like you on our side. So can you just briefly just tell the viewers as they're coming on, just pretty much what made you get into, becoming a real estate agent?
Okay, well, that's a good question. So prior to fully delving into real estate, I had an investment group that I started, and it was primarily stocks, but the overall idea behind the investment group was a group of people putting their money together, and we would just purchase things as a collective, stocks, real estate, and the sorts. And eventually, once we reach a certain goal, then we would, dissolve the LLC and, just spread the equity that the LLC had accumulated. And I'm the kind of person where it's like, you know what, I have all of these people that I put together and they're putting money in. I want to know the ins and outs. So at the time, I was still working at the airport at a bookstore, managing several stores, and did that for about 10 years. So I was just like at a point just in my life and in my career when it was like, all right, you got to aim higher. You want to do something that's going to be more lasting in for your community, and for yourself and for your family. So I just took it as an opportunity just to jump into real estate, start a new career, be able to learn, assist everyone within the investment group, and also just put myself in a better position financially.
Well, that's definitely way to go.
Yeah.
Financially is very important. I know we're going to talk about the actual finances of home buying later, but as far as making money for yourself, it's very important. You even got me, interested in becoming a real estate agent.
I'm telling you, do it.
I love to make money though. I like the feel of money in my hands, but I'm also just a strong believer, in investing. Not everything is necessarily tangible. You know how that goes as far as having actual wealth. And like I said, watching you, and I know you're definitely proof is in the pudding, because you've been making money. I could tell, I could see your growth on Facebook. You're smiling big. I said, oh, he's making money now. I see your smile get bigger and bigger, because it's like you feel good because you're helping people, and you're also helping your family. I know you have how many children do you have, by the way? Because I'm always
4.
trying to keep track of them on your page. Okay.
Yeah, so 4 altogether. I have a mini basketball team. One more, and we have a starting 5 basketball
One more.
team.
Well, you're still young, so you still got the possibility.
Oh no, don't know. We're not even.
No, you got.
So I'm good.
You can't back out now though. You might as well just go for the whole team right now.
Yeah.
Well, while you're at it, you might as well just go for the whole team. But again, I actually did want to ask you, now that you bringing up the finances. I guess we can talk about this a little later, as far as how other people can get involved. But since you started, have you brought on other agents onto your team?
Yeah, actually, we just actually for because so I'm with Keller Williams. Our office is in Maplewood. We have an office in
Hmm.
Maplewood, Springfield, and one in Newark. And we just had something called the fall rollout just yesterday, and we have one other agent that I just brought about. I have another agent that recently passed her test, and she's looking to join within the next couple of weeks. So yeah, that's one of the beauties about real estate that a lot of people may not know. Even as a realtor, you can still set yourself up to get different streams of income. So it's kind of like I know people hate
Wow.
the multi-level type of thing, but if you bring
Right.
an agent in, you invest in their career, and you can actually be a sponsor and earn
Hmm.
income that way as well, outside of the daily sales and work that you do.
Oh, okay. Yeah. See, I didn't even know that. Now, oh, let me. Oh, I blew this up too big.
Join the
Let me start
team.
writing some of this down because I'm gonna go back and have to to watch this show again because people do have one idea in their mind of what a real estate agent is and how they make money.
Hmm.
So can you just briefly share the different types of real estate agents that there are, and also some of the possible ways that people can make money from it?
Okay, well, yeah. So I mean, you really just have the two types of agents. You have like a buyer's agent and you have the listing agent. A buyer's agent helps the buyers find a home. Listing agent, you have the fiduciary obligation for the seller, the owner of the home, and marketing their property. Those are the main two aspects of a realtor or of
Mhm.
a real estate agent. But
Okay.
overall, in real estate in general, there's plenty of ways as investor, wholesaler, realtor. There's many different avenues that you can take to earn money in real estate.
I'm sitting here now trying to figure out which route I would like to go because
Listen, they're all
it is a big field for people to look into. I know commission is obviously, I guess, the biggest, I would say, biggest way to make money from selling a home.
yes
Or
and
no?
no. Yes
Okay.
and no. So I mean, as a realtor, yes, you have to be licensed to be a realtor to buy and sell property. But as
Okay.
a wholesaler,
Hmm.
something that many people don't know, you don't need to be licensed to be a wholesaler. And with wholesaling, you kind of just add a fee onto
Hmm.
whatever real estate that you're selling. But I don't want to get too deep into that because that's just a whole other conversation that we probably have to do. I'll bring some wholesalers that I know that are really killing it onto the call next time you invite me over, for this on the queue. But yeah,
Right.
with one commission on or a fee as they call it with wholesaling, it could earn you 10, 15, 20. I've seen people make up to $30,000 off one
Oh
wholesale
wow.
deal. Yeah. Yeah, so it's a lot of money to be made in real estate.
So how does someone get to that point though of actually making $30,000 from, I guess, from the sale of just one home?
Yeah, so I mean, if we're still talking about wholesaling, then it's all about the numbers. So the idea
Okay.
with wholesaling is you find a property that is in some type of distressed condition, and you get that property under contract, and with if the numbers make sense for another investor, they'll pretty much buy the contract from you, not the real estate, but the contract, and you'll assign that contract to the next person. So let's just say, for an example, that you get a property under contract for 100,000, and overall
Mhm.
it's worth 300,000 when fixed up. Okay, and it needs,
Right.
and of course, the property is a fixer upper. It might need $100,000 in repairs. So you have the
Right.
property for 100,000. It needs a hundred
Mhm.
thousand in repairs. So you're at 200,000. You can sell that
Mhm.
contract to another investor for, let's just say, $20,000. So you'll sell that $100,000 contract to them for 120,000. They
Mhm.
get it. They put the $100,000 in repair. So they're all in 220,000, and then they can end up they could end up just fixing it up and earning the 80,000. But you initially end up selling the property for just for getting your $20,000 fee. I know I'm trying to explain it a little quickly.
Yeah, I know. I'm not a numbers person. I'm better with words, but I think I get the gist of what it is you're saying, though. And that actually is an important thing to know because it is about the numbers.
It is.
And a number of people don't realize how important it is to know your numbers.
Yeah,
when it comes
absolutely.
to before you even get to the level of readiness to purchase a home, knowing, for example, and you can talk briefly on this topic as well. Your credit score, for example, what is looked at, as far as purchasing a home. What is it that your credit, should contain, what it shouldn't have on it. Do you want to talk briefly about that? Because that is something that I hear a lot of people talk about, that they use as a reason as why, they're not able to purchase a home. Sometimes it's the money, of course, the savings, but then I hear a lot of, well, I don't have the credit, or I have bad credit, or I don't have any credit. So how can I even possibly think about purchasing a home?
Yeah. So I know we do have a lender, one of the close lenders that I work with, that will be getting on the call. He can get a little bit more in detail of that, but a quick overview of that. I mean, if you're using an FHA loan prior to COVID, most lenders were doing a 580 minimum credit score. Now they look more so in the 620 range, but I know often people think they need something in the sevens when that's not the case. Of course, the higher your credit score, the better the interest rate that you would get, but you don't need perfect credit in order to get it. FHA is backed by the government. They're able to take higher risk than conventional loans. And as far as the down payment goes, for an FHA loan, you need a minimum of 3.5% down. That's not including the closing costs, which is the other major expense. But again, you don't need tens. I've actually, me and Davian, the gentleman that's going to be getting on the call, we were actually able to help someone buy a home, and they only had to come out of pocket maybe $6,000.
Oh wow!
Yeah.
So $6,000 for as far as the total, or just like for the down payment, or the closing costs?
The total, because she was able to
I need to
qualify for
you.
a gift program.
I like, as you mentioned, Davion is going to be coming on. It's Davion, right? I don't want to mispronounce his name. So he will be coming on. I guess within the next few minutes or so, we're going to have him come on. He's a senior loan officer, so he's going to be coming on, sharing more so about the beginning process of just getting started, of purchasing a home, the things that you have to do to prepare yourself, because you just can't just one day say you want to purchase a home, although all of us would love to say that and just walk up, to a house and say that's mine, which I might actually do. Sometimes I walk around, I do see nice homes, and I'm like, oh, that's going to be my house one day. I know somebody's living in it right now, but that's going to be my house one day.
They're just watching it for you. That's it. They're house sitting for you. That's
all. That's how they're doing. That's how they're sitting there waiting for me to come around until I'm ready to, to take over. But, I definitely, again, real quick, I just appreciate you coming on. We have some people commenting. My aunt came on. She said, good evening, valuable information. Thank you. Absolutely. So, as I said, you're always, benefiting people. Just posting just what we're doing tonight, sharing this information with viewers. I know a number of the people that is watching right now, they either own a home or they're interested in purchasing a home. So it's definitely valuable, information for many people right now.
Yeah,
so and we can. I know you have your friend as well, who's gonna, like you said, come on and finish, explaining. But I just want to thank you before the show ends, of how important this is, especially within the Black community, for us to talk about this, because again, as the credit thing, sometimes our community, we have things happen. We had the pandemic, happen, that's still happening, and affected a lot of people's savings, affected a lot of people's credit, and it just had people feeling like the possibility of owning their own home was no longer there. And so that's why it's important to have gentlemen like you on to come on and tell people that there is an opportunity still there.
Absolutely. And, to be honest, despite, everything that we see going on in the world right now, when it comes to real estate, it's a great, great time to be able to purchase. And as you mentioned, you might have some people that already have a home. It's
Right.
even for them, there's opportunity right now in refinancing. As far as the interest rates are right now, they're at all-time lows. Prior to COVID, most average interest rate was in the mid fours, and now I'm seeing rates as little as 2.75, 2.7%, and that saves you so thousands of dollars, based off where you would have been a couple of years ago. So I know many people probably are hearing, oh, it's a seller's market, there's no inventory. And I'm not going to say that that's not the case, because it is the case. We do have all-time low in inventory right now, like 20-year lows or so. But when you look at the numbers and you look, whereas you might pay $20,000 more for a house now because of the market that we're in, when you factor in what you're saving on the interest rate, you're still coming out on top. So don't let, just the naysayers and the talks about, oh, it's a seller's market, it's so hard to find. That may be the case, but I mean, you're doing this for something, bigger. These are goals that many of us have, and home ownership is still one of the staple American dreams that's there, and especially within our community, and it's imperative in building wealth. So definitely, for anyone that's listening, if home ownership was something that you aspired for, something that you thought about, speak to a lender. Davian is great. I've worked several deals with him. He speak to him. He's offering certain things for the people that do reach out, which he'll talk more about. But
yes, we're gonna talk more about that. Hey, cousin, what's up? So as you said, Davion, I guess he's on his way, coming on. We're gonna have him come on, and he's gonna talk about the lending process itself, which is something that, again, I need to learn. I need to learn about all of this. There's not one part of this process that I'm not interested, in learning about, because it is part of building your American dream. I still think that's something that people can attain right now in 2021. Yes, thank you. I appreciate the tags for people who may benefit from this. Those who are not able to tune in right now, I will have this available to go back and watch. You'll be on the Q Productions page. You'll be on Mac's page. You'll be on all the Facebook pages I have, YouTube, all of that. So
everywhere. We're going viral with this one.
Oh no, this is definitely some information that needs to go viral. So y'all need to help a system brother out, by continuing to share and comment. And again, if you guys have any questions for anyone that's tuning in right now, I'm here with real estate agent investor Mackenson, and just come on and just share whatever questions you guys have. Just continue what you guys are doing, because I can see from my end. I know you can't see it, Mac, but I can see all the shares and stuff on my end, and it's really beneficial. Like I said, I'm gonna have to come back myself and learn as far as you were mentioning earlier, the FHA, the government loan versus the traditional loan. Just letting people know there's different ways to kill a cat, or what's the term? Skin a cat. To my kill a cat. Same thing. But yeah, there's different ways that you could go about purchasing a home and not feeling like it's something that you can't do. Because I always feel like whatever it is that you want to do in life, you can do it. You just have to know that you can.
Absolutely.
Like you said, block all these naysayers and things like that. And I really think it's more about who you actually have in your corner. Having the right agent, I think is really important. Having someone like yourself who actually cares about the person having, the lowest interest. And a lot of people don't have that. They don't have the right people around them. And that's with anything. So if yourself, you have an actual team with you. I know we work with Davion, but you have other team members as well?
Yeah, yeah. You know what? I have a lot of preferred lenders that I work with all across the board. When it comes to the home inspector, I have trusted home inspectors that I work with that I know care, for the clients as well. I have attorneys that I work with, appraisers, title company, pretty much every aspect of a real estate transaction. I've built relationships with, one, two, three different people within that field to help with a smooth transaction. Because oftentimes, I like to think as the realtors, they're the glue within the transaction. We're right there. We have direct communication with the other agent who has direct communication with that seller or with that buyer. We speaking with the attorneys. We're speaking with the home
Right.
inspectors. So we have to be like in it
Right, you
fully,
have to.
and we keep the glue. We keep everything together. So I mean, it is important to have a good realtor by your side that is going to put your needs first and advise you the best that they could.
Yes, and I think I saw Davion briefly come on. I don't know where he disappeared, but Davion,
Mhm.
we're ready for you because I do have some people that are saying they're interested in programs, which is perfect segment for this moment right now for him to come on. I do have my Anna was actually asking also, can you touch on condos and as well as townhouses? I guess you could start on that, Mac, and we could continue with Davion, his thoughts on that once he comes on to the broadcast.
Okay, yeah. I mean, it's really the same thing whether you're purchasing a multifamily, a townhouse, or a single family home. The process is more so the same. You might have different fees with townhomes. You might have like the HOA fee attached to it. Um, but as far as like the financing funding, that's more so the same. Where 3 to 5% down payment, credit score in the low sixes minimum. But yeah, it's beneficial in many ways. One thing with townhouses, though, generally because they're within a community, they may appraise at a slower rate than a single family home. But I mean, if that's not the aspect that you're looking at, if you're looking at it as, you just want somewhere to live, somewhere where, your money isn't going towards rent, where it's, you have no value with it at the end of the day, where it's kind of like when you're paying a mortgage, it's like putting money in a bank. You can always end up
Right.
going back and taking that money out at a later date.
Okay.
Okay. Let me just shoot Davian a text. I think he's having a little difficulty.
Yes, Shahi, I definitely believe that. I'm definitely learning that right now. And he's definitely been a benefit to everyone so far, and I know he's doing the same right now. I know he's taking a call right now. We do have another guest that
Yeah, I
is
was shooting
on.
Davian a text. He should be getting on in a second.
Okay, yeah, because I saw him pop in, and I said maybe he felt like it wasn't his time yet, so he could go back out
Oh,
again.
yeah, he could be at any second now.
Okay, so you guys, I did mention, earlier, my earlier post, excuse me, that we had another surprise coming on. So we do have another guest. Oh, Shahid is here again. Shahid, he said, ask him who's his best client.
It has to be Shahid. It has to be Shahid Bailey. It's a great,
We appreciate the love. We already know the answer to that. So. And my cousin Brenda Edwards, she said HOA is Homeowners Association. Thank you, Brenda,
Correct,
for sharing that information with us. So tonight's second great guest is here. And we're
Okay,
going
he
to
got
bring
on. You see him?
bring him on in
Good.
1 second. Shahid. I love it though. I love it.
No, Shahid is great. We should be closing on his house very, very soon.
Oh no,
So
I
I'm
believe it. I've been watching him
super
too.
happy for him.
Yeah,
He,
I'm
he
definitely
deserves
happy as well. I love seeing people work together and the chemistry between you two guys. So Davion, you are here. Let me get you set. Okay, I had to unmute
Good
your
night. Good night,
microphone because
everyone.
we don't want to miss anything that you have to say tonight. Davey, I appreciate you coming on tonight. I know.
Thank you guys for having me.
Yes, thank you. I appreciate that. When me and Mac were first initially talking, he mentioned your name, and I said, "Oh, I would love to have him come on. You know, the more the merrier, because this information is so important for our community." So
I appreciate Mac. Yes, and I appreciate Mac inviting me onto the show. You know,
yes,
we've done a lot of stuff together. So when he told me about this, I had to, just tell him, listen, whatever you need, Mac.
I'll be there for you. And that's very important. That the networking and knowing that we mentioned having the right team. And you guys are a wonderful team. I've been watching some of you too. I've been behind the scenes, but I've been seeing him post as well with you. So would you like to just introduce yourself as well, Davian? What is your title? What is it that you do?
Okay, great. So thank you guys again for having me. So real quick,
you're welcome.
My name is Davian Clark, and I am a licensed loan originator working for a company called Family First Funding. We have our main office in Toms River, New Jersey, but we're licensed in multiple states. I'm licensed in 33 states. Currently, I have about 7 states active. Yeah, but we have our people all over the country, so we try to make sure that we reach out to every state possible that we can, get the message out there. So one of the main things I try to do is to target states where I know that we have a large population of Caribbean people that are looking to purchase home. Not necessarily focus on Caribbean people, but obviously that's where I'm from.
Nothing wrong with that.
So I try to stick to my niche. So that was my main reason of targeting those states, because I know that we have a huge Caribbean diaspora in those areas. And in doing this business for a number of years, I realized that there's a lot of information that our people are not aware of. And, 95% of the times when we're doing a mortgage transaction, we don't have a clue. We're just signing papers away and we're hoping that whoever is working for us is giving us the right set of information. So learning that and seeing that, there's a lack of information in our community for in that industry, I decided that I had to take the mantle to make sure that we get that information out there so people could be well aware of what their options are when purchasing a home. So that's a little bit about what we do. But Family First Funding, we're a licensed mortgage bank, and we can pretty much do everything that the major banks can, FDIC insured banks can. The only difference is because we're much smaller than those institutions, you'll get a more, it's kind of cheesy cliche word, but you get a more family feel working with us, I can speak for myself. I can speak for myself, because I do a lot of deals with Mac, and I don't think we've had a client that has given me a 1-star review so far. So to me, I take those very, very highly, So when a client is satisfied, they give you a 5-star, that means that you did do what you said you were going to do. And that's how I look at it. So for me, it was an opportunity to work with Family First in for years. I've been with them since I think 2016. And since being with this company, I can say that I've seen the growth with this institution where we've been able to offer some products that a lot of the major banks can't even offer. And there's a lot of flexibility with our underwriters, and Mac could attest to this, where if there's something wrong with a file, you could actually get on the phone with the underwriter or someone close to the underwriter and figure out what's going on, versus them just killing a file and making that borrower feel like they have no hope. So that's one of the reasons why I've stayed with this organization, because of you in this industry, there's not a lot of people that are loyal, and so when you find a team that you have behind you,
I believe
that's loyal, you can, exactly, how this industry is, so when you find good people and you find a good organization, you may not get everything you want from them, but you have to find the things that make sense for you, and where you could actually take that information and spread it to your clients, so that they can feel like, hey, even though I might have heard a few things about this company, but because of Davian Clark, I'm definitely going to stay with them, because he's going to make sure that we get into our homes. So that's one thing I've learned over the years to be a better person for my clients. So whether if I'm at an organization that's not family first, they'll always get that feel that they're not alone during this transaction period.
Right.
But within saying that, when we do our seminars, our webinars, I do mine's a little bit different. Typically people come and they'll give you PowerPoints and they'll talk about the mortgage process. Since this is like more of a podcast, and I'm pretty sure there might be questions you may have that your audience may want to have answered, and to not waste time and bore you guys about mortgages, I'd rather just ask.
It's important.
Yeah, well. For me,
I know when you sit down with clients, it's different. You go through, the thoroughness of an actual mortgage process. But what is something that you can share tonight to tell people as far as getting them started on obtaining their first mortgage, as far as their credit? What are some of the first steps that you would suggest for clients to do before they even come to see you?
Okay, perfect. Well, for me, it's a little bit different. When I meet a client, whether it's a cold client or a client that's come from a referral, access, or maybe just find us online, the first thing I always tell them is that you've stopped at the right place, because it doesn't make sense you go out there start looking for a house if you don't even know what you're qualified for, right?
Right.
So for myself, what I like to tell clients is that your first step is to make sure you know what you can afford. And for myself, when I meet with a client, I have to do a thorough examination, pretty much a pre-underwriting of what needs to happen. So the first thing is we'll have a conversation. I like to sit down with my clients, whether it's a phone call, video call, however they feel best. And I get an understanding of what they're trying to accomplish, whether it be in their first home or a second home, but exactly, where they are in the process, what have they done so far, what are you looking for? And once I know that, then I can set proper expectations for this process. A lot of times when people hear about mortgages or people that have bought homes 10 years ago, 15 years ago, they always say, oh, when I bought my house 10 years ago, it was so much easier. I could just go in. And I said, yeah, that was before the recession happened, and you have to remember that mortgages have changed over the years. So what you're used to is long and gone. So you need someone in your corner that's going to be able to decipher the information for you, so that when you see the documents, it's not like foreign, if you understand what I mean. So for me, it's all about educating my clients. Every client that I speak to is like a family member to me.
That's what we need, education.
Yeah, exactly.
If we have that, we all will be, homeowners. If we have the proper, education.
Exactly. And
go ahead. I'm sorry. We just had a question, but I want you to continue.
Sure. No, we'll take the question. What was the question?
Okay. It's from Shahid. He said, what are some of the do's and don'ts while trying to obtain a mortgage? What are ways to ensure the process goes smoothly and lessen the chances of being declined?
Okay, perfect.
Very good question.
Good question.
Oh, he knows what he's talking about. All right.
Yeah.
Hey, Tiana.
He's very. It seems like he's been doing his research. All right, so for
showing
me,
off now.
And I can only speak from myself, and I can't talk about how the loan officers, loan originators perform with their clients. But personally, again, when I meet a client, I tell them the mortgage process in America is not the easiest. There's so much different layers to it that you don't even see it. You just see yourself sign a bunch of paperwork, but that's it. But there's a lot of behind the scenes that happen where we have to do background checks on every single individual in that transaction. And sometimes people wonder, like, hey, how did they find out this about my information? when you're a mortgage company, we have tools to make sure that we're doing a proper due diligence on the borrower. Now, I'm not saying that there aren't people that could probably fall through the cracks, but if the job is being done correctly, it's very unlikely that you're not gonna find the information that you're looking for. So what I always tell clients is, you need to tell me everything. I'm like your best friend, your brother, your whatever you want to consider me, but you need to tell me everything. If there's something that you're thinking about doing, and you have to second guess yourself or question it, then you should probably ask me about it before you move forward. Because one of the
Right.
worst things we want to have happen is for you to maybe pay a debt off when you didn't even need to pay a debt off. You understand what I'm saying? So there's simple things that people think that they're doing to better themselves, and it can sometimes hurt them in the long run. So the first step I always tell clients, if there's anything that you think that I should know, tell me. If I don't want to know it, I'm gonna let you know that I don't want to hear about that. Do you understand what I'm saying? Because I need to make sure that the process goes as smoothly as possible for you. Because at the end of the day, most of the people that we're meeting, this is their first home, and as we know, buying a home is probably one of the largest investments. Yes, and they're scared because what people always tell me, the first thing I'll say, hey, I want to make sure I get all the first-time home buyer credits that's out there. And I was telling them, well, to burst your bubble, there's really no such thing as a first-time home buyer. Technically, if you've not owned a home in 3 years or more, you're considered a first-time home buyer. So a lot of people think that, I'm a first-time home buyer because I've never owned a home. No, technically, if you own 3 or 4 homes, but you've never owned it in 3 years, then you're now considered a first-time home buyer. And the standard criteria for first-time home buyers is we have 2 types of loan in America that mainly is geared towards the population of first-time home buyers, and that's the FHA loan, which requires 3.5% down, and we also have the conventional loan, which is a little bit more difficult because they require a little bit more for you to qualify, such as a higher credit score, the debt to income ratio, which is all your debts calculated and put against your income. That number is much lower than what you can get for FHA. Sometimes the down payment's a little bit higher depending on if you meet the criteria. You may get 3% down or 5% down. So there's a little bit difference to that. It typically likes higher credit borrowers. So if you're coming in there with a 640 credit, chances are you would never get approved for a conventional loan. Or if you do get approved, you're going to pay exuberant amount of money just to get a rate that doesn't even make sense. So typically what I tell clients is if you're going into a transaction with very little money down, then your best bet or your first solution should be an FHA loan. Forget the whole, it has mortgage insurance and most sellers don't want FHA loan. I always tell clients, at the end of the day, the money is still green. Whether it's an FHA or conventional. When they sign those closing papers, the money transferred over to the seller, it's still green. So what I do, and Mac could test this because we work hand in hand. Before we send the client out to put an offer, and we always have a discussion to figure out what's the best way for the client to achieve your goal. So if it's a situation where the buyer may find a house but needs a little work, Mac and myself will have a conversation to figure out, hey, is this best for us to go FHA or conventional? If the client absolutely can't go conventional, then we'll discuss ways for us to make sure the loan is approved via FHA. So working with us, you'll always have someone in your corner that's going to try to be one step ahead of the game to make sure you're not falling behind, if you understand what I mean. Because as you know, in this market, it's very competitive.
I definitely see that it's competitive in multiple ways.
Exactly. So for us, as mortgage lenders and as real estate agents, it's we got to be able to have a unique relationship where we could be able to pick up a phone call at 10 o'clock at night and say, hey, we have this deal that we're trying to figure out. And Mac and I, we have had a number of situations where we had to try to maneuver those things. So it builds confidence within the individual that, hey, you have someone that's on your side. But within saying that, back to the point, what are the do's and don'ts of getting prepared for mortgage?
We actually have someone with a question. She said, I read there are things not to do right after obtaining a mortgage. So maybe you can speak on that as well once they do have the mortgage.
Okay, great. So to get you prepared for a mortgage, the first thing I always tell clients is do not apply for anything. If you're going to buy a house and you need to buy a car for work, you have to make a decision. Do I hold off on this car and get this house, or do I get this house or do I get this car, and then maybe it will have a negative impact on me obtaining this house. So the first thing I tell clients, if you do not have to apply for anything, do not apply for anything until you close your loan. Okay. The second thing, make sure that you're aware of all debts that you owe. That could be student loans, credit cards, regular loans, child support, alimony, whatever it is. Make sure you're aware of it. Make sure you disclose that to your loan originator, because one thing you don't want to have happen is you start a transaction and right in the middle of the transaction, the underwriter finds something that you weren't aware of. You know, it puts you in a very precarious situation where it's going to be hard for you to get out of. Especially because the debt to income ratio is very crucial. So if there's something we're not aware of and that pops up, that throws off the entire scenario that we're putting forward. Okay, so we always want to make sure we're aware of everything that's out there that should be new or that's old that we may or may not be aware of, so that we could be put on the right footing. Funds. Make sure that you have some money saved. A lot of times, first-time home buyers, they barely even have the down payment saved. The one good thing about that, though, is working for an organization like Family First Funding, we do have programs that offer down payment assistance, and one of the programs is a true gift program, which I'll speak a little bit about. You know, I know we're probably a time constraint, so I have to be conscious of that. But most first-time home buyers, they don't have, they barely can find their down payment, much less the closing costs. So with our organization,
that's very true, and they don't realize that those are two different things, because everyone's focused on the down payment. They don't think about all the other costs. So they may have $10,000, but then when they're ready to actually purchase a home, or when they're ready to come to you, it's actually more than that, because they didn't think about all the other fees, such as the closing costs, or even paying for an agent, for example.
Well, with the agent part, one thing to clarify. So in New Jersey, the seller pays for the realtor fee. That's part of the commission. So although, you know, I may be representing you as the buyer, you don't have to pay me anything. My commission comes from the seller, despite who I'm representing within the transaction.
Okay, so thank you for clarifying that.
Yeah,
I know people don't think about all that, all the fees or what they don't have to pay for.
Yeah, the two biggest costs is going to be the down payment and the closing costs. But you do have other costs also that you would need to factor in. You have your home inspection, which could be anywhere between $400 to $900, oftentimes depending on what you're getting done. You'll have the appraisal, which could be, you know, $500 to $700, which is another upfront fee that you have to pay. You know, so there are other costs that you have to think about as well.
Exactly. Yeah, there are some costs, but the good thing about it is, as I said, we do offer a down payment assistance program. So what it does, it allows you to get 3.5% down. If you're doing an FHA, if you're doing a conventional loan, you'll get up to 3% down, and that will go towards your down payment. Now, the good thing about that program is that you're literally walking into that house with equity based on the fact that you're going to have your down payment provided for you. Now, there is a lot of catch to it where they're going to take some fees out of it, but if you needed $10,000 to close and someone's now giving you $6,000, you're $4,000 off, right? So you're much closer to your goal than you were before. So that's one of the good things about and there's no lien placed on your property. So you could move us to the house. You could sell the house tomorrow, and no one would call you and say, "Hey, you owe us $10,000 that we gave you towards your down payment." So that's one of the beauty of us having that program. But within saying that, you know, I always try to send a checklist of items to my clients as to what I'll need. When you work for a company that you get a W-2, it tends to be a little bit much more easier for you to qualify. So I always ask my clients to, if you work for a company or you're a W-2 employee, you know, 2 years of W-2 works, you know, 30 days pay stubs.
Okay.
Yeah.
But is that 2 years of you just working, or what else is included, or that you should make sure is right within those 2 years?
Yeah, it becomes tricky.
Credit, things like that.
Yeah. Well, well, there's a whole lot of factors. So in regards to the work situation, I know we're literally in the middle of a pandemic, and a lot of people
Yeah,
lost their jobs. A
still
lot of
are.
people changed industry. Yeah. So
Right.
you find that it's become a little bit more tricky, but because of the rules, once you're working as a salaried employee, then you typically could just move right into buy a home. If you're an hourly
Okay.
employee, then there's a little bit more time frame that you have to wait. Typically if you switch jobs and you paid on
Right.
an hourly basis, they'd like for you to be on that job for 6 months because at least they know
Right.
that
Hmm.
you're still working. Nobody wants to give you a loan if you just start working next month and then you get fired the following month. So when you're an hourly worker, they want to see that consistency for a few months before they can qualify you. But when
Right.
you're a salaried
We
employee,
actually have
that can be done
another
right away.
question from
Sure.
Miss Beloved Valentine. She said, "What's an ideal amount to have saved, and how does your credit affect your down payment or
Okay.
your closing costs?"
Closing. Okay, great. So I know we had a question before that, so I want to make sure
Right.
that we're getting to all the questions. Um,
Yeah, everybody wants to know what is it that they what is I told you I was telling Mac earlier,
mm,
credit is really important, and of course,
yeah,
as she mentioned, savings. People just want to have a number in their head that they should be
yeah,
striving for, I guess, in today's current
yeah,
market. What is it that they
exactly.
need to do? Because those are
Well,
the
well,
basic things, I believe.
yeah, well. I always tell clients, if you're gonna go with FHA, and forgive me if I've jumped over a few questions, but I'm trying to, and this is why, not to go off tandem, but this is why I kind of like to have the questions thrown at me so I can try to answer them, so I don't just start talking, all over the place. But to answer your question, typically, as I said, if you're going with an FHA loan, you typically need 3.5% down. Um, there are also programs where, again, depending on the type of property, for example, HUD, which is the government's that owns these properties, that they foreclose on, whether they're FHA properties or sometimes they're conventional properties. But HUD may have a program where for FHA loan, you could only put $1 down. That's like a dollar down program. But that's a real program. You have to find a house that's specifically owned by HUD, and it allows you to put $1 down. But what that means is the other 99.9%, you're gonna have to finance that plus your closing costs. So to give you a quick, easy synopsis is I typically tell clients that you need to calculate the purchase price by 6 to 6.5%. So, for example, if the purchase price is 100,000, you time that by 6.5%. So that would be 6,000 or 6,500. That would include your down payment and closing costs. And that's a rough number, but it's typically right around those numbers in regards to down payment and closing costs. For us as a lender, we don't charge fees other than an application fee, which is very small, and depending on the state that you're in, those may not even be that much.
Hmm.
But for us, the only time you pay origination points is if your credit score is really horrible, or the market is just really crappy and you just can't get a good rate without you paying some form of points for it. So to answer your question, for the last question you had, typically when you're buying and to get a mortgage, FHA, you could get an FHA loan with as low as 600 credit score. But ideally, if you're looking for good pricing, you want to be at a 640 or higher.
Higher,
I've done
right? I would
deals.
think.
I've done deals with 640 credit score, where they have paid no points, and I've done deals with 650 credit where they've paid some points. So it just all depends on the location of the loan, and the down payment size. But for FHA is pretty standard, where the mortgage insurance is a fixed percentage, 0.85. Typically, the interest rate is going to be lower than a conventional loan because again,
Right.
FHA is typically designed for borrowers with not so perfect credit, and because of that fixed percentage amount of the mortgage insurance, that's like their protection of saying, hey, if you default, then we'll protect it one way or the other. So ideally for us, my perfect client is a 660. If you have a 660 credit, I love you. If you're below
As long as it's not
660,
666.
Yeah, 665.
I don't want that. I just be like, either add a point or take one away.
Subtract a point or something. Exactly. So apart from that, 640, you could definitely get in there without worrying too much about putting in points. Anything below that, then you don't have control over what's going to happen to your interest rate or closing costs, right? So so to answer your question, 640. Now to get the gift program that I just spoke about.
Yes, I want to talk more about that. We do have just one quick question, and I want to get into that because I know that's really important. My aunt, she said, when do you need a cosign to obtain a loan? Because I do hear a number of people ask, what if their partner's credit is off or their personal credit isn't right?
Okay, perfect. So co-borrowers and credit score. Now, one thing I always have to let clients know, because they'll say, hey, can I get a borrower that has a 700 credit, to get on this loan with me? I tell them, unless your credit score is higher than that borrower, it actually doesn't help you, because we're looking at the lowest borrower's middle score. So if you are the main borrower and you have a 660 credit, but your co-borrower has a 750 credit, the credit score is not going to help you, because we're going to look at your scores because it's the lowest of the two borrowers.
But I thought it was like the average of of whoever had, I guess, like the lowest scores. I've heard something like that. The average between like their 3 credit scores.
No, it's the middle of the lowest borrower. So and that's something that you can't even manually put that in. That's automatically in the system. So once you pull the credit and you populate it into your system, it automatically tells you the score that it's using. So you can't maneuver that and manipulate it or anything unless you do what's called like a simulation and a rapid rescore to get the scores higher. And then you could change it then, but no one can manually manipulate the scores to say, hey, we're going to use the average of the the best scores. It doesn't work like that. So that's one of the factors I tell clients, that hey, if you're not going to get a borrower with a strong enough scores like yours, then the scores is not going to help you. Where the co-borrower comes into play is when we have a debt to income ratio issue. So for example, let's say we're doing a FHA loan, and you as the main borrower, you're only capped at 200,000 because your debt to income ratio is at like 53%, which we can go up to as high as 56.99%. Us as a company, we don't want to go there, but we can. So with that being the case, if you're very close to the limit, the DTI limit, then that's when we'll say, hey, maybe get a co-borrower to add on there, as long as they have very little debt, very good scores, and at least 20, 30, 40,000, depending on how much more cash we need. And ideally, there must be a family member.
Okay,
so keep that in mind. So if you have a friend and you say, hey, my friend wants to buy a house and be a co-borrower, FHA won't allow it. If you have a niece, uncle, aunt, mother, brother, father, sister, not even cousins, they want to allow. Stepmother, stepfather, I think stepbrother, stepsister, those are the people that are allowed. But you can't say friend or fiance could work as well. So those are
pretty much if you have a partner, y'all need to just get married.
And pretty much.
And not play house.
Exactly.
It's a serious thing. So
What if your boyfriend, girlfriend,
just go ahead and do it.
If your boyfriend, girlfriend, we'll still look at you, and as long as you guys are living together, that's fine. But if you're gonna say your cousin wants to do it or just your regular friend, that's not allowed. So that you have to keep that in mind. But yes, to answer the question, the co-borrower makes sense if your debt to income ratio is very close.
A lot of people are commenting saying they didn't know that the information that you're sharing, they didn't know that. So, which I didn't either. So I'm right there with you guys.
There's, and I tell you this, in the mortgage industry, every single day you learn something new. I'm always learning in this industry, because there are times Mac and I will be on the phone and something pops and I'm like, damn, Mac, I didn't even know this even existed. Because there are rules in that, and I have to be honest. I'm very transparent with with how I do
Right,
business. If
that's
I'm not
good.
if I'm not certain, I'm not gonna just give you an answer just to please my heart. I'm gonna go off,
Right.
research it, and then come back to you and say, hey, this is what I found out. Even if there's a bank over there giving you a better rate than me, I'm gonna tell you, hey, I can't beat that rate. Go to the next
Right.
bank,
Family first.
because at the end of the day, exactly. So, and that's just how I operate. At the end of the day, karma is a hell of a thing. You don't want to do something bad, and then you don't get your blessings. So that's how I look
No,
at it.
you sure
But
will.
yeah. But hopefully I answered that question. What are some of the
they're
don'ts?
appreciative. People are saying thank you, so they
Okay, good.
appreciate.
All right, I think I'm gonna try to circle back to the first question. What are some of the
Let's get into that
don'ts?
since we got everyone, still on. So I know you want to
Great.
share that about your gift program and also the lender credit, I believe. So I'll let you
So
share that,
exactly. So let me just get to that before we even go. So one of the things that I spoke to Mac about, and Mac said to him that whoever's on this call, I don't know who's on the call or not, but obviously you guys have control of that. If anyone, and I'll send my link information so that you guys can click on it. If anyone after this call within the next 24 hours, so what time is it? It's 8 o'clock, right?
Yes.
If by 8 p.m. tomorrow you guys sign on, fill out an application, we'll make sure we make a note of who that person was. And whenever you buy a house, whether it's 1 month from now, 6 months from now, 1 year from now, we'll make sure that you'll have some form of lender credit towards your purchase.
How awesome is that?
Yes, put that out there. I want you to
think
say
about
it
it like
again
this.
for those in the back.
Think about it like this. If you're able to get the True Gift program from us, and you're also able to get lender credit, so it could be a situation where you could actually go to your closing table and walk away with a check, and we've seen that happen before. Matt could attest to that because that actually happened to one of our clients. So you could actually walk back out of your closing with a check in your hand. So
wow,
I know we won't be able to capture everything tonight, but one thing's for certain: if you do fill out that application, you'll have access to speaking to me. And if you do decide to work with Family First as well as Mac on finding your home, we'll definitely make sure that we get some lender credits once we get to the closing table.
So you guys are listening. You're going to share your information below, your links below, your websites, email, all of that contact information for people to reach out to you. So you guys have 24 hours to go. Take advantage of it while you can. He's here. He's available. Mac is also here to help you guys along the journey. So I'm just, really appreciative. I'm glad, I wanted you to share that tonight because people are looking for assistance and they don't know where to go. They don't know, like you said, people are as loyal. They don't know who to go to, because this is a very serious investment. I think the biggest one that you could do is purchase a home.
Most 90% of the people that are on this planet, buying a home will probably be their major investment. So you want to make sure that, and I'll be honest with you, when I bought my first home, right out of college, maybe a year or two out of college. I think a year out of college. I was about 22 years old, and I never had a clue what to do. The only thing that saved me was because I worked for a nonprofit organization, and I was doing like counseling, first-time homebuyer counseling. So that kind of gave me a little insight as to what happened in the mortgage industry. But even then, there's still so much things behind the scenes that you're not aware of, that you just think that the bank just doesn't want to lend you any money. But really and truly, for someone to lend you, when you're borrowing people's money, they want to make sure they do their due diligence thoroughly.
Oh, definitely.
Once you sign on that paperwork and you leave and the bank sends that money to whoever they're paying that house for, it's now their responsibility to try to get that money from you every month. And we've seen it. The recession happened. People lost their homes all over the place. Banks, some banks went under. Some banks sold mortgage notes, So it just depends. But I always try to make sure that our clients are thoroughly ready. And I always tell them, listen, you could vet me all you want, and then you could go to the man next door. But I guarantee you what I say to you, you're going to find out one of us is telling the truth or lying. And I'm pretty sure I'm not going to be
you now.
lying.
And I just met you tonight. and I would go to you over someone else, down the street.
Yeah.
I definitely would reach out to you first.
I
We
appreciate
do
that.
have one more. Thank you,
Sure.
Damien. We do have just one more question. My mom.
Sure.
I know you briefly touched on this, but she said, "How long do you have to wait to refinance if there is an emergency after you purchase your home?"
After you purchase it. Okay, so typically you can refinance within 6 months. That's ideal. But if you want the maximum amount of equity out of your property, you would want to wait at least 1 year, because FHA typically, if you have an FHA loan, they typically want you to be in the property for 1 year. Not saying that they won't tell you that you can't refinance after 6 months, but what's going to happen is you're not going to get the full value of your house. You're going to only get dollar for dollar of whatever improvements you did to that house. So if you didn't do anything to that house, you're not going to be able to get any money out of, even paying for your closing costs of the refinance. You're not going to have enough equity. So, I typically tell my clients, wait 1 year after you purchase, give yourself some time to, figure out how the house is and give the house some time to grow some equity. And then, figure out exactly what the plan is, because you don't want to just refinance just to refinance. It has to make sense to refinance. Like, I have clients that call me all the time and say, hey, I got a letter from this bank saying that they could offer me this rate. And I said, hold up, look at the numbers, make sure it makes sense, because whatever they can do, I can do.
Right, the numbers. Yes, we brought that up earlier.
Exactly. But I'm not just gonna. It has to make sense. If it doesn't make sense, I'm not going to do it. And I tell clients all the time, I said, hey, I have a client the other day that came to me, nice size loan, $800,000, nice commission. And I looked at him and I say, hey, listen, if I just want to make a commission off you, I just run and tell you, bring me this loan. But you're literally going to be wasting money doing this refinance. Right. And I broke it down to them, and when they saw it, like, wow, and I know if I didn't speak to you, I would have went with another bank, because they gave me a rate and say, oh, I could get you this. And I said, no one could promise you something if they're not the underwriter. That's the first thing you have to remember. If you're not the underwriter, there's no loan originator that can promise you that they're going to get you certain things. We could work hard as we can to make sure it happens, but I never make promises, because I know I can't control what happens when it leaves my hand.
And that's something you should live by in life, in general.
Exactly.
And we have one more question. People are saying that the show is very informative, so I appreciate, again, I'm going to keep saying that. I appreciate you guys coming on. But we do have a question from Latoya. She said, are there good deals for second-time homeowners?
Are there good deals for is this a Mac question? Or that's a Davian question.
Yeah,
that sounds like a
Mac question.
It's whoever can give the best answer.
Yeah, so I mean, it really depends on what you mean if there's good deals. Because again, we are in a competitive sellers market right now. So as far as if you're looking for something just amazing, it'll be difficult, especially if it's listed on the MLS and certain things. But good deal might mean you're paying retail for something, and if it's a second home, and let's just say you're using it for an investment property, and it's a 2-family, or let's just say a 3-family, you might be paying retail for that property. But if the rent income covers the mortgage and is able to give you a good amount monthly income, then that can consist of a good deal. Good deal doesn't necessarily mean the price that you're paying for it. It could more so mean what you're getting back on a monthly and the revenue that it'll build. So yes, there's definitely good deals out there. Are there a lot of properties that are undervalued? Not really.
Okay. Yes, thank you, Mag. I appreciate you answering that.
Yes.
We have Anana Bailey, excuse me. She just had her question. She just wanted to make sure she wasn't misunderstood. She said, after closing on a home, should I not apply for anything or open any accounts involving credit?
Okay, so I think that's a Davian question. Okay.
Thank you.
so well, what I always tell clients, listen, once you sign that paperwork, then you're good with us. But until you sign your closing documents, do not apply for anything. we literally run your credit 24 hours before you close. A lot of people don't know that.
Wow,
it's a soft pull. You won't even notice. But we literally pull your credit 24 hours before you close. If there's something that pops up on there, and it wasn't there before, chances are that could degrade your deal. So we always tell clients, do not apply for anything. Even if it's an emergency, hold off until you close.
Until you close.
So hopefully.
So Nida, because actually Nida is under contract and will be, sorry for putting your business out there, but we'll be closing on a house very soon. So Nida, put those credit cards up. Shahid, put those credit cards up. And wait till after we close, and then we could do the shopping spree.
Right.
Don't apply for anything. Don't use the credit cards. Nothing. Just remain the way you are until you close.
Yes, absolutely.
Well, she's asking. She wants just to clarify it for afterward, not as far as during the process, but if there's anything she should do after, like right after.
Before and after. Never pull your credit. Don't. Once you're applying for a house, and the minute you go under contract, and if your credit report hasn't expired, do not apply for anything, because a lot of times when you
can't do nothing.
You literally can't. You're literally
sit there until you get the keys to the
you're
house.
Literally in house. You're literally in house jail. Yeah, you're literally in house jail for 30 to 45 days. Like, you literally can't do anything. So so we always tell clients that. And one thing I always let them know that is, even if you think that there's an opportunity for you to buy something, you should probably analyze it first, because even as simple as using your credit card to pay for the appraisal, I always tell clients be mindful of that, because you swiping that card for $500, that now increases your balance, and it could change your minimum payment, and it could affect your credit scores as well.
Yeah,
right. That's true.
Keep in mind, if your credit was pulled,
thank you,
and you haven't found a house before the 90-day mark, and that credit report expires, they'll be pulling your credit again. So a lot of times people say,
I don't have to worry about my credit like that. I think one time is enough for me.
Yeah, no, you have to.
That's how I have to pull my credit one time. It's like pulling my teeth. You have to keep in mind multiple times the day before.
Yeah, well,
like that's enough. Like, y'all already been in my business. Like, what else do y'all need to know? Just give me my keys.
Yeah, well, you have to keep this in mind. When you're borrowing people's money, you don't have a say in how the rules go, and that's what I tell clients all the time. Because clients will come and say, "Hey, they're giving me all this trouble," and I said to them, "Hey, you realize you're borrowing $500,000 to buy a house?"
Right. If someone
came to you and say, "Hey, lend me $500,000," you're looking like, "Are you crazy, dude? You're not gonna give them $500,000 just like that." So for us as a bank, we're lending you that money, but we have to make sure that we do a thorough due diligence so that we can hopefully know that we'll get our money back. Because not because we give you a loan means that you're gonna guarantee pay us for 30 years. Anything can happen. I've seen situations where people have closed this month and they've lost their job the other month. The bank now has to figure out how they're going to get their money. You understand what I'm saying? So us pulling the credit multiple times, it's just the cost of doing business. We have to protect ourselves as the lender, and for you as the borrower, it should also give you discipline to say, hey, if I'm doing such a big ticket item, then I need to have discipline enough not to go out and just splurge while this process is going on. So, hey, it doesn't hurt.
Yes, that's true. Now, she said for sure, got to make sure nothing shows up that will cause you to keep your promise to pay. Yeah,
exactly.
That's very true. And Latoya, she said, I meant to say, are there good incentives for second time for homeowners? Not deals.
Well, when I guess I'd have to ask, when you say are there incentives, meaning like if you already own a home and you're buying a second home, or if you bought a home, sold a home,
yeah, because I believe I don't know if I put her comment earlier. Let me check and make sure. I don't know if you guys saw the comment on your end, but she said I purchased a home for the first time, and she sold it due to divorce. and she was saying that there were good incentives for being a first time homeowner. So I guess she's wondering for the second time, is there any good incentives for being second time homeowners?
All right. Well, again, to reiterate what I said when I started the call, there's really no such thing as a first time home buyer. So if you got a home with your husband and you got a divorce and it's been over 3 years since you sold that home, then technically you're a first time home buyer.
You can still apply for an FHA loan.
Okay.
Yes. So you can still do 3.5% down. You can still go 3% down if everything works out in conventional. We can still give you the down payment assistance, all of those things.
Right.
And if you sign up within 24 hours, you'll also get the lender credit as well too to go along with that. So yeah, there's, as long as you don't own a home already and you're buying a second home,
they're nice. Yeah.
Then you'll have incentives. Okay, good.
So we definitely have to have you guys come back on. We have a number of people just asking.
Always a pleasure.
When are you guys going to come back? They said great show. I guess people have so many different questions that they need answers and understanding. They said so. Apparently, I'm going to have you guys come back on for a part 2 because as you see, there's a lot of questions. So, and I'm so thankful for you guys being on here because I wouldn't know what to tell y'all.
Another good way what they can do is they could always sign up within 24 hours, and we'll make sure that we make a note of them.
Saying it.
And so when you reach out to us, so once you reach out to us, we'll definitely make sure that we'll give you as much information as possible so that you're better prepared once you find that home.
Q, can I share one story real quick that I had with Davian? Okay, so as mentioned by Davian, he and I have worked several deals, and it was one particular deal, and I'm sure he already knows which deal I'm going to talk about because I bring it up all the time because it was truly an amazing thing, and I think I'm sharing this because it's inspiration for anybody that can be listening right now and may have a credit score that's not where it needs to be. So I was helping this one client, okay, and she was looking for a rental. It was a listing I had in Maple, a 2-bedroom listing where I met her at. And in looking at her income, I'm like, you make good money. And she was Haitian American. And if I have the opportunity to help, somebody from my background to become a homeowner, then I'm going to lean towards that. So in seeing her income, I'm like, you make good money, why don't you look to purchase a home? Long story short, her credit, was very low, in the low fives at the time. Okay. And she had one lender that she was trying to work with, but when the lender saw the credit score, they just pretty much said like, no, we can't get approved now. I connected her with Davian, and what Davian did is he ended up putting her with somebody within his organization that helps get the credit score where they need to be. And I think it might have been within 6 to 8 months, she was able to go from like the mid fives up to the mid sixes and able to qualify for a loan. And that two bedroom rental that she was looking for, we ended up closing on a house later that year, her first home, that was a 4-bedroom, 3-bathroom house in Mount Olive with an in-ground swimming pool, beautiful lot, new construction home for like 400 something thousand. So
we're going barbecue next year there.
Can't wait.
So, barbecue.
Yeah. So even with that incentive, beautiful home.
I'm sure it was.
Even with that incentive that Davian is giving within the 24 hours, if you're thinking like, I'm not ready now, don't wait. It's not just a matter of you being ready now. With the right lender, with the right realtor, we will set up a plan, set up a goal, and get you into the position. So it may not be 1 month, it may be 5 months or a year, but it'll be the steps to get that goal taken care of.
Just getting started.
Let's get it
Exactly.
started. Yeah.
And talking to you
Thank you
guys.
guys for
Like
having
you
us,
said,
though.
they have 24 hours. You guys
24.
are available.
Practice
Y'all
taking
better grab
23
them
now.
now. Because once this broadcast is out there, they're gonna be getting hit up with all different people. So they're gonna make time for you. I trust these two guys. They'll make time for anyone.
Yeah. Well, again, the best way.
Y'all got it. This is your time right now.
Yeah, the best way for them to take advantage of us is to fill out their application once we post the link.
Yes.
And as a matter of fact, I'm sending it to Mac now so he can forward it to you.
Yes, please.
To post it. But once they post the link, then once they fill out the link, then and it's a pretty straightforward application. It literally takes about 2 minutes to complete. And
okay, that's not bad at all.
Yeah, once they complete it, then they could reach out to us and we'll be able to take it from there for them.
She said Mac is amazing. He's always available.
Yeah, Mac is great. Mac is great. You have a good realtor in your corner. I love working with Mac. You know, we always, you know, try to make sure all our clients are happy. I don't think we have one deal that we've not been able to close, Mac, and we hope to keep it like that.
Nope.
Yeah,
you have to keep it that way. Exactly.
I believe it though. I'm gonna be a future client as well.
Yeah, hopefully.
Yes,
yeah,
and
if you want to read up a little bit about us to see if whatever I'm saying, if I'm really just a crazy person talking, when you click a link to fill out the application, if you click on the home button, you can either click on the testimonials to see what people are saying about us, you know, and those are real people talking.
You know, reviews and referrals is everything.
Yeah,
absolutely.
Yeah. So I always tell people, I always point them there to read what the clients are saying. You know, you get a sense. You know, those are real people talking, let you know what their experience was.
Yes.
So
like I said, we're definitely going to have another show because I do want to talk more about student loans, which is my issue. Student loans, medical bills, moving out of state. I don't want to say too much about that to give out my business too much, but yeah, there's a lot that we have more to cover. So you guys just let me know, and we'll sit down and have another show on this. Nada has been working with Max since February. He's been making the process real easy, very knowledgeable. Yes.
Thank you. Appreciate you, Nada.
Yes.
Whenever you're ready, just let Matt know, and I'll definitely.
Everyone's saying how informative this has been. So.
Great. Just let Matt know, and I'll make myself available the next time.
Yeah, David, you gotta get like Mac, make yourself available to the people.
Yeah.
You can't be hiding back there. Family first. Family, we're supposed to be able to reach you anytime.
Listen, I'm here.
No matter if it's 2 a.m. or what. Yep. We're gonna be able to reach you.
I'm here. I'm always Mac knows how to get me. I'm always here. There's never time Mac could call me and not get me. So if he needs me, I'm always available to be here for you guys.
And hard work definitely pays off. You guys have been working hard. So would you like to share briefly? I know you're going to share all the links and information below, but if you'd like to just briefly audibly just say how people can reach you.
Perfect. Yeah. So if you guys would like, you could go to my personal website, which is D Clark. So that's D as in David, C as in Clark, L as in Larry, A as in Apple, R as in Robert, K as in Kite, E as in Egg, and then you have a period, and then it's Fam1Fun. F as in Frank, A as in Apple, M as in Mary, the number 1 symbol, F as in Frank, Q as in umbrella, N as in Nancy, D as in David, .com. So dclark.fam1fun.com.
And Mac, you as well. Your social media handles and websites information.
Okay, well, yeah.
Everybody's online, so.
Yeah, if you my Facebook is my name, Mackenson Bonnet. My email, the business email is mbonnet, that's M, B as in boy, O as in Oscar, N as in Nancy, N as in Nancy, E as in egg, T as in Tom, at kw.com. That's the email. My website is mac at mynjhomesearch.net. So that's mac at mynjhomesearch.net. It's a real cool site. You can set up a profile. It works very similar to like a Zillow. So you can actually set things up there to get properties that you're looking for. I can set things up for you. Or my cell phone number is 973-380-3704. I do this full time. You know, I don't have any other careers or anything, so I'm always available to
Yes.
help my clients.
Always.
This is all we do.
Yeah.
This is all we do.
Call him right now.
Call me.
Yeah,
I'm
that's
here.
all we do.
Right after the show.
If y'all can see my background, I'm still in the office.
Yes,
Yeah.
okay, let's see.
Yeah, we eat,
business,
breathe,
still in the
and
office.
sleep real estate.
Yes.
Again, I appreciate you guys. I'm sorry, Mac. I know I mispronounced your name earlier. It's your last name is so it's Bonnet.
Bonnet, yeah. It's the
Okay, that
Haitian
sounds
name.
better than whatever I said. So
No, it's fine.
So again,
All right,
I thank you
guys.
guys for coming on. So for everyone that that said thank you, we had a number of people say thank you, that they learned quite a bit tonight, as well as myself. So again, we're definitely for you guys. We're going to have a part 2, maybe be a part 3. Who knows what we have? So I think this is really, really important discussion that we had. Very informative learning lessons tonight for people.
Yeah.
I'm sure some people got some wake up calls about what it is that they need to work on. And what they have been doing right. Let's not forget about that as well.
Yes.
Thank you, Wanda.
Yes.
I appreciate that. She said, blessing to both guests. You also, Qadriyyah, great info. Yeah, whatever I said earlier, we're not going to go into that. I might have to might edit that out so I can sound like I had it right the first time. But yeah, the way he said it sounds a lot better. So we're gonna
It's the French acting. You gotta roll the R's. You gotta roll.
Yes. I'm willing to accept whenever I make a mistake, but we're gonna pretend I didn't make that tonight. So
it's cool.
So again, thank you guys. You guys, you're gonna share your links on here tonight after the show. So 24 hours. You guys are down to 23 hours and 30 minutes. 29 minutes. So make sure you reach out to him for this incentive.
Let me just add this in the application. If it asks about who referred you, you could just let them refer your show, so we'll know exactly who it is. So we can put them on that list. And as I said, whether it's 30 days, 90 days, 1 year from now, 2 years from now, as long as I'm still with Family First Funding, you'll make sure that you have a lender credit. Yes,
you guys heard that here first. 23 hours and 28 minutes. So.
And real quick before we go, I just want to say, because I don't see who's on Facebook or anything right now, but have to give a shout out to my lady, because I work a lot of late nights and she's there holding down the children. So just have to say I appreciate you. Thank you. I know it's not easy. So I have to put that plug in real quick.
Yeah, see, you're a smart man. Not only available, but smart. And Adila, she asks us, is this open to New York residents as well? I believe so, right?
Yes, we could definitely do the lender credit in New York, but the down payment assistance program, New York has their own, so we have to follow New York State rules with the down payment assistance. But yes, the lender credit stands no matter what state you purchase it.
Yes, Kashmir. He said, I guess I'm late. Yeah, you're late. But it's okay. It's definitely going to be posted later. I'm not going to remove this from our Facebook pages, as well as on the Q Productions YouTube page. So it's definitely there for you. I also have a copy as well that's going to be downloaded for anyone who may wish to have a copy of the recording. And it's just available. I'm available too. Let me put that out there. I too am available. We're all out here, trying to help, help the community, help the people that we care about the most, as well as strangers. You know, that's how you have to be open to the world. So again, I appreciate you guys. Yes, you're welcome, Adima. So again, I appreciate you guys. I would just briefly like to say, remind everyone, keep sweating yourself to a healthier self. That's my motto for On the Q Productions. I'm also I'm also selling and promoting for my On the Q Productions, my hoodie line. It's getting cold out here, so I know you guys need something to keep you warm. So I have my hoodies on sale right now on Teespring, Dress on the Q. So that's for you guys as well. We got mugs, hoodies, t-shirts, all of that stuff. So
awesome.
I'm always trying to
send us the link
brand as well.
Yeah, please share the link, please. So
yes. Oh, yes. I'm definitely going to share that below. You guys could just go to Teespring / Dress on the Q. My store is there, so you can just purchase right there. I also have a discount code available up on the page before you make the purchase. So I have all that going on. I have my other podcast with the two ladies, Latoya and Keisha, whatever you say podcast. So we're coming back the next week or so with a recorded episode as well. But again, I want to just thank you guys. I know we had extended show tonight, but it was a lot of much needed information, I think. So I appreciate it again. I can't tell you guys more than enough.
Thank you.
Oh, thank you again. Have a good night, guys.
You guys, everyone have a blessed and wonderful Wednesday night and week. Thank you.
Thank you. Good night, everyone.
Bye-bye. All right, good night, everyone.